Thank you, Mode. All right, everyone. Welcome to well, welcome to Thursday. Welcome to the monthly webinar, as Mode says. This is Mark de la Paz from FX Instructor. If you guys haven't attended my sessions at all, I'm typically here Mondays, Wednesdays, and Thursdays. Hi there, Hardy. And for tonight, our first module, our first topic would be about Fibonacci analysis. Okay, basically this is a module that I have for a series of lectures that I do. That's called Forex 101. As Mode says, if you have any questions, feel free to post them. We will be discussing about 22 slides. I don't think we're going to take an hour and a half to do that. So what I'd like to do is we discuss things and I can what I'd like to do is we discuss this theory and afterwards try to see if it actually works. Look at real live charts and see what works and what doesn't. Okay? Excuse me. So let's move on. And let's take a look at the course objective. So basically, we want to understand the theory behind the Fibonacci analysis. We'd like to learn the basic Fibonacci tools that traders would use. If there's any special Fib tool that you're using, I don't know about it, but I'm willing to discuss the math behind it. And after going through the module, I hope that people would realize that there's more to Fibonacci analysis than drawing your Fib retracement. Everybody does that, but hey, you can do more than just Fibonacci retracement with the Fibs. All right. Who is Leonardo da Pisa? Basically, he was from Pisa. He's an Italian who traveled through much of the Arab world. And in his travels in the Arab world, Leonardo da Pisa learned about the way Arabs did their math. He learned how to use 1, 2, 3, 4, 5 instead of your I's, your V's, and your X and C's to come up with numbers. And basically, because of this guy, our life is easy. Imagine doing calculus using the Roman number convention. So we owe Leonardo da Pisa first for giving us the Arabic numeral system or for introducing it to Europe. He also discovered or rediscovered the Fibonacci summation series. So for traders, the more important work of da Pisa was the rediscovery of the FSS. He did this by examining the rabbit problem. So what is the rabbit problem? The rabbit problem is essentially a ridiculous question. It asks how many pairs of rabbits can be placed in an enclosure or that's placed in an enclosure can be produced in a single year from a pair of rabbits. At the start, if each pair would give a new pair or would give birth to a new pair every 2 months. And to solve this problem, to solve this dilemma, da Pisa came up with this approach. Basically, he just made a diagram representing the immature rabbits. When you say immature rabbits, rabbits that cannot give birth yet, with bees. And he represented the mature rabbits with A's. And what did da Pisa do? He made this diagram representing these rabbits for each generation, and he came up with this representation that we have. And what is this? We don't see any numbers. Basically, he noticed that in each generation, the number of pairs of rabbits available came up with a series of figures. So what is that series of figures? That series of figures basically starts with 1, okay, your first pair. The first pair, of course, was immature. So second generation, or rather second month, when it matures, you have it giving birth. So you now have 2 rabbits. And basically, he went on and on and on with this, counting the number of pairs. And those number of pairs that he got represents what we call the Fibonacci summation series. So what is with this Fibonacci summation series? Well, to many who love math, it is a magic number. I'm not really a math lover. I think I failed calculus. But to many who love math, the Fibonacci summation series came up with a lot of peculiarities. From the FSS, we came up with what we now call the golden mean. Golden mean is basically 1.618. It is a mathematical constant. We also have what's called the golden conjugate. The golden conjugate is basically a ratio between a number and that following it in the series. Okay, so the golden mean is the ratio between a number and that preceding it, and the golden conjugate is a number that's the ratio between a number and that which exceeds it. If you examine the FSS, another peculiarity of these series of numbers is that the square of any number is equal to the product of the 2 numbers on either side plus or minus 1. It is really this mathematical strangeness of FSS which a lot of the earlier traders focused on, thinking that, hey, there must be something magical about the Fibonacci summation series. So let's examine that the results of our Fibonacci summation series. So as we said, the ratio between a number. So this is actually your Fibonacci summation series, folks. Oops. This is your Fib series, or at least part of it. It goes on to infinity. So if you get the ratio between a number and that which exceeds it, you get the golden ratio. It is a mathematical constant. You get phi, your 1.618. Over the years, even before traders started using Fibonacci analysis, people have found that these properties of Fibonacci appeared quite a lot in math and in art. In fact, people found out that your Fibonacci numbers and these ratios often occurred in nature. So guys, basically this is the source of one of those key Fib numbers that we have, 1.618. The ratio between a number and that which exceeds it. So this is our Fibonacci series. Let's move on. Let's take a look at the next slide. Alright, so to traders, most of us are more familiar with the basic Fibonacci ratios. Most people who do Fibonacci analysis typically use it for retracement analysis. And in retracement analysis, what do we always look out for? We always look out for the golden conjugate, your 0.618. We tend to think if markets have retreated up to 0.618, we tend to expect that a bounce happens. But there are other numbers in your Fibonacci retracement. There are other Fibonacci ratios. So the first of this, the most important, is 0.618, your golden conjugate. Again, it's just the number and the ratio between the number and that which exceeds it. Then you have 0.382 or 38.2 fib. That one is basically a result of the ratio between two numbers in the series where you skip one of the numbers. So let's get back to the series here. For us to say that for us or for people to have gotten 38.2 fib, it's basically the ratio between this number and that the one following it. Okay, by skipping where you skip one, you skip the number following it and get the next number to it. You get 0.382. To get 23.6 fib, basically you skip two spaces. Okay, so that's really the first basic discovery of the earlier technicians, earlier traders on how to do or on how to apply the Fibonacci numbers. Of course, I'm sure a lot of you guys already know this already. We use more than those numbers. In fact, in many charts, in many charting tools, you actually would get figures like 78.6 fib, 88.6 fib, and some people actually look at the 14.6 fib or 14.58. Where did that 14.6 come from? That's basically an exponential of the golden conjugate. What do we mean by this? Remember the initial ratios of Fibonacci, 0.618 and 1.618, the golden ratio. Now, we play with the golden conjugate. Get a calculator, multiply 0.618 by itself, and you get what number? You get 0.3819. Multiply it by itself again, you get 23.6 or 0.236. You multiply it with itself again, and you get 0.1458. So that is how we came up with the with those numbers. As for the fib retracements above 61.8 fib, well, you get the square root of 0.618, and guess what it is? 0.786. Get the cube root, you get 0.886. Now, for those of you who do Fibonacci extensions, you're familiar with 1.27, 1.617. Where did they come from? After all, above 1, the only Fibonacci number that we can get is your golden ratio, the golden mean, 1.618. Well, basically, they played with the math again. They multiplied 1.618 with itself, and they had 1.617. They computed for the square root of it, and we have 1.27. Do they work? Well, I would suggest that we look at the chart later to see whether these numbers are, well, actually work in live market situations in the real world. So this is how your Fibonacci ratios, your fib numbers were derived. But I guess we have to ask, why did people use it in the first place? We already mentioned earlier that the Fibonacci numbers were observed in nature. You get the Nautilus, you get a Nautilus shell, and as the Nautilus shell spirals out, the increase of the radius of that Nautilus shell is basically a factor that's 1.618. So we get the golden mean to measure the increase of this Nautilus shell. You get a flower, and in many flowers, the number of petals, daisies. In our example here, a daisy. The number of florets in a daisy has 21 in one spiral and 34 in another. You get the human body. Remember, guys, 21 and 34 are actually numbers in the Fibonacci series. You get the human body and all segments of the heart muscle contracts by 62%. Okay, along the along the y-axis. So when earlier traders noticed this behavior in nature, they thought that is there something similar to this in financial markets. We have to remember, we have to understand that the first people who charted prices, the first people who did technical analysis, they basically were naturists. These guys believe that whatever is found in nature is perfect. Whatever is found in nature should be repeatable elsewhere. Okay, that's really the cornerstone of those people who figured out how to, well, who started developing the whole technical analysis idea. All right. Now, I mostly use MT4 in charting. So we will be discussing the tools that MT4 has in that we have in the MT4 platform. These are your retracement tools, your channel tools, expansions, arcs, fans, and time zones. Personally, I use only the retracement tool and the expansion tool. Okay, I'm familiar with channel tool. It works, but I'm not really a fan of channel analysis. Fibonacci fans, they also work, but I don't really use them actively. So guys, feel free to ask questions whenever you have any question about what we're discussing. Excuse me. But let me move on to our next slide. All right. Let's talk about retracement analysis. When we, or most of us who learn technical analysis, probably use retracement analysis or probably did retracement analysis as our first Fibonacci application. In classical retracement analysis, we really rely more on two figures, 38.2 fib and the 61.8 fib retracement level. Okay. So how do we actually do retracement analysis? It's very simple. We define the price action that well, Ava, I definitely would suggest that we will do that. I'm just discussing first the what we have in the slide, and then we will look at an actual chart. Okay, so how do we draw them? We define the trend, the price swing that we are analyzing by looking for its starting point, its lowest point, and its highest point. And again, in fib retracement analysis, we tend to give focus on the first two levels that were introduced, 38.2 fib, and of course your golden ratio, your golden conjugate, 61.8 fib. But how does that look when it comes to a chart? Okay. When we apply this to a chart, let me just fix our chart here. What's a good market to assess right now? Let's take a look at euro. When we apply or when we use fib retracement, we use it to, as the name implies, we use it for retracement analysis, which means that when you start using that fib tool, you basically should have had one price swing, and you should be observing that that price swing may be over. Meaning, if I'm looking at the EURUSD here, the first fib that I can do, if I'm analyzing, okay, let me put our pen. If I'm analyzing this chart, the price action that fib retracement should be analyzing would be this. I have this rally, and I'm starting to see that it's starting to turn around. So it is time for me to think about how much of a pullback could I anticipate. That would be the time for me to think about using fib retracements. And let's do that. So how do we do fib retracements? Where's the starting point of your rally? Drag your retracement tool to its highest point, and there you go. Software will typically draw those retracement levels for you. If we look at our charts here, you will notice that we have our first pullback saw us stopping at 38.2 fib. From 38.2 fib, we bounced. We tested the previous high. In fact, for a while we were above it, and now we're dropping. Now, when you've had a new high, of course, you need to adjust your fib retracement to that new high. Okay? At that point, all the other pullback points would have to be adjusted as well. But essentially, the main idea is identify the price swing that you're assessing, and you can come up with a pullback point for that price swing. Personally, I use fib retracements to ask myself, where do I enter the market? Where can I join the price swing that I want to be in? If market is rallying, where do I jump in on the pullback? When can I expect that the pullback is over? Those are the questions that I tend to ask. Some traders, of course, especially those who do counter trend strategies, they tend to look at the fib levels as a price objective when markets are pulling back. You can do either approaches. You can use it for price targets. You can use it for a bounce off point. The important idea really here is you're doing things the right way, meaning you're actually assessing the correct price swing. Okay, so I cannot use a fib that's drawn from here to here when I have a new high already. I should be using that new high. Okay, and that would now be the valid set of fib levels. All right. Let me get back to our PowerPoint, and let me see what's in the next slide. I actually forgot. It's been a while since I looked into this mojo. Okay, so the next slide basically are notes on how to do fib retracement analysis, or basically observations that I have when I've started using fib retracements. I've noticed that when you're seeing or when you're looking at the trend, okay, if there is a new trend, if there's a new swing, the retracements that you get will typically be deep. You can see 78.6 fib retracement, 61.8 fib retracement. But as a trend progresses, the Frida, most brokers now actually use MT4. So I'm not the person to ask. I don't really recommend any broker. I want to stay as neutral as possible about it. So when you do retracement analysis, Initially, you're going to get a sharp pullback, but no picture. How about now? Okay, thank you, Harley. So initially you get sharp pullbacks, but as you move on, you get shallower and shallower and shallower pullbacks. At some point, you're going to get retracements that would only see 23.6 fib. That's why even for some people, they have that 14.6 fib retracement level. Personally, I don't use 14.6 fib unless I'm feeling very desperate and feeling very aggressive about joining a trend. All right, let me just okay. So just a note, in retracement analysis, you get sharper pullbacks at first, but as your trend gets bigger and bigger, those pullbacks become smaller and smaller and smaller. You can also check which fib level is popular in a certain currency, in a certain instrument. What do I mean by this? Let me push that chart up again. Now, I don't really trade your Swedish kroner. So let's take a look at it. I'm not really familiar how the Swedish krona works. I want to figure out whether it's a good idea to use the fibs in Swedish krona. What can I do? I know the fibs work, but there are so many fib retracement levels. Well, one method that you can do is to draw those retracement levels in previous swings, figure out which retracement level is popular. In this particular rally, 50 fib is our first fib pullback point. So now I tend to think for subsequent rallies, I should be looking for 50 fib retracement. Okay. For subsequent price swings, I should be looking for the 50 fib level. Although looks like our latest, okay. We also had 50 fib. Paulo, personally, if I'm taking an intraday trade, I tend to base my lines from the hourly level. If I'm doing a big picture analysis, the thing to remember here is that you ask yourself, what time frame am I trading? Am I trading intraday, in which case you focus on the dominant time frame for intraday charts, and that's the hourly level. If you're trading big picture, you're a position trader, the most followed levels at that point would be daily levels. You can draw fibs in hourly charts, in daily charts. There's nothing wrong with that. But if you're drawing fibs in the daily level, in daily charts, and you trade intraday, you give greater importance on fib levels that you draw in the hourly level. I have a good question. To me, what is more significant is where do I find the close? Of course, it's nice if we always get our low exactly at the fib level. But as long as I have a close right at that area, I give recognition to that as a valid fib level. I don't do fib extensions myself, although I use fib expansion to come up with price targets when I find myself scratching my head, cannot figure out what to do next, cannot figure out what's the next support, what's the next price target, because this is uncharted territory. We will go to that tool, the fib expansion tool. Basically, for me, okay, let's take a look at this chart, the Swedish krona. Looking at this chart, okay, we don't have a previous reference point, so this is one time when I would be using Fib expansions, which we will go to later on. So okay, I don't want to get ahead of myself. Let's just go to the next module, and then we will get back to how to calculate TP using Fib expansion. All right, actually, it looks like our next module is Fib expansion. So basically, Fib expansions are used to identify the price objective of a rally. They're very useful when working with uncharted territory or when you're dealing with ABC corrections. Price objectives are established by, again, you draw the expansion and you determine the price targets at the subsequent Fib ratios, your golden mean, your 100 level, and 161.8 Fib, your golden ratio. Boyke, if there's a violation, okay, let me get back to that. If there's a violation of a Fib level, but I find that at the close, I am right around that Fib area. The next candle opened right around that area, and I see subsequent candles doing that. Then I look at it as I am satisfied that that's actually holding. Ava, I'm not an Elliotician myself, but Ellioticians actually come up with their target of wave 2, of wave 3, of wave 5, based on Fib expansion ratios. Okay, I don't use Elliott wave myself, but the way they figure out where will wave 3 end, where will wave 5 end, that's typically based on the Fib ratio. Prida, well, for Fib retracements, I would say yes, but let me just go over it quickly. If you're doing Fib retracement analysis, the most important question is, where is the price swing that I'm assessing? What's the low? What's the high? That's it. Okay. If there's a new high, then you use the new high as the reference point. However, if the new high is in an active candle, meaning my current high is in an active candle, I shouldn't be using it. I should rather be, let me just stay with the old high. And once this closes and I start seeing that the market is pulling back, that's the time for me to move my Fibs to the new high. Okay, that's really it as far as the Fib retracements. All right, let's move back to Fib expansion. So to come up with price targets, I tend to use Fib expansions when I can no longer find support or resistance levels that was active in the market before. A good example actually would be our earlier chart, but let me see the next module first, the next slide first. Okay, next slide is actually Fib Fans. So let's do Fib expansion. All right. So Swedish krona, this is something that I don't touch. If we don't know how far price action can go, one tool to use would be your Fib expansion tool. So essentially, Fib expansion works by identifying the active swing. Okay, I'd like to see whether Fib expansion actually worked with this in this case. Although I have to point out, you had a reference point, you still had a high around you had a former high here around 7.86. Say we didn't know that, how would I use Fib expansion not knowing that there was a reference point? Well, identify the price, the latest price swing, identify the pullback point. So points A and B, when you're using Fib expansion, is actually your high and low. You get your pullback, and see how far your pullback went. And now you have the price target. You now have the price target for your breakout. In fact, we actually had trouble with this latest upswing, since your breakout point immediately had a resistance, a price objective based out of the Fib expansion. In our latest rally, okay, this is the thing, I guess. Let's look at our latest rally. We don't have a reference point for the Swedish krona in this latest rally. You'd have to go back to last year to come up with an intraday price target. So we can use Fib expansion. Where's the latest upswing? The latest upswing would be this one. Okay. So let's do Fib expansion here. Where's the low for your pullback? There's the low for your pullback. So in this particular breakout, since we have our 61.8 Fib expansion period right around our breakout point, I would adjust my breakout point to 7.93 instead, and look at 8.03 as the next price target of this particular breakout. Paulo, what are the better pairs to look to work with Fibo? I actually don't know which is better, because I found that Fibos would work with whatever currency pair. This is something about technical analysis though. The more liquid a currency, the more liquid an instrument. Whether it's currency or it's a future, or it's a forward, it's a futures contract, or it's a stock, it's a stock price. As long as it's liquid, technical analysis works. Again though, the more liquid an instrument, the more likely that your technical tools will work very well. An illiquid instrument will, well, if an instrument that you're trading is illiquid, you will have trouble in consistently applying technical analysis. Well, Paolo, the thing with the yen pairs is that your price swings are wide. You typically get false breakouts. I would suggest look at the close, and we will often find that the close is actually around the Fib area. The Fib pairs have a tendency to exceed, or the yen pairs have a tendency to exceed support and resistance levels. But you ask yourself, where did the candle close? Where did the bar close? And you will likely find that it is near or at your support resistance, at your Fib retracement. Excuse me. Raj, Fib failures. Okay, and math, or rather Boyki, I don't know what you mean by MAS here. What math? I don't quite understand that. Alright, so really for me, I normally would use moving averages. In my chart, it's always 200 SMA and 21 EMA. So simple and 21 exponential. 200 simple, 21 exponential. Alright, let's look at Fib fans next. So what are Fib fans? Fib fans are basically drawn much like the retracement tool. You identify the price range that you're assessing. Unlike in retracement analysis though, in Fib fans, instead of drawing horizontal lines, we draw a diagonal line which intersects the different retracement levels. So how does that work? Well, let's look at the next chart. So here's how your typical fan looks like. what your software doesn't show you is that to draw that fib fan, to, um, to draw these lines, it actually gets the retracement, 38.2 fib, 61.8 fib, 50 fib, and 61.8 fib, and it just draws a diagonal line which intersects 38.2 fib retracement of the original price swing, 61.8 fib retracement of the original price swing, 50 fib retracement of the original price swing. So that's actually where we got those lines. It's actually retracement analysis, but instead of drawing a lot of violations, but I guess you get a picture. We did turn around. We did turn around. So my problem personally with using the fan lines is that we often see this chart turning around around those levels. But I guess you can see for yourself, folks. Does it work? Um, well, if you allow for false breakouts, you have a nice consistency with respect to markets tending to bounce off that level. Let me zoom in and let me show you how those fan lines were generated. Remember our fib retracement analysis? Look at this. Intersection of the fan line and your retracement point. Okay, so nothing, for those of you who are curious where those fan lines came from, we basically just drew a diagonal line intersecting that level. Now, how do you use fib fans? Fib fans are actually used to project potential resistance lines, potential support lines. And if you look at our chart here, again, you will notice that we kept on bouncing whenever we hit 61.8 fib fan line. We saw the 50 fan line acting as a resistance. We saw it acting as a support. Although, as I said, there are a lot of false breakouts. Okay, I'm not really a fan. So if there's a fan of the fan lines, feel free to defend the fan lines. Let's move on. Let's look at the next two. Okay. Let's look at Fibonacci Arcs. Now, Fib Arcs, I totally do not know anyone personally who uses it. But the way they work is that you expect those arcs to act as support and resistances throughout. Okay, through most of the fib tools, the lines that we generate, the curves, since we're talking about an arc that we generate, they represent support and resistance lines. Okay. Now, how are they drawn? The same rules as when we draw the Fibonacci retracement. Identify the price swing. Identify your lowest low, highest high in the price swing. And that's your starting point. Again, the software will generate the arc for you. But the way they're generated, the same as we drew the fan lines. In the fan lines, we initially had a fib retracement, and then the software drew a diagonal line starting from the starting point of your price swing. In Fibonacci Arcs, we do the same. Okay, let me just zoom in. Now guys, I personally do not use Fib Arcs, and I don't really know anyone who uses Fib Arcs, so I can't really attest whether it works or not. There are a lot of books that says it works, but I don't know any trader who uses it. And again, our arcs were drawn by getting the intersection point. Okay, 38.2 fib, basically 38.2 fib retracement, and this does not. Oh man, here's a problem with the. Oops. Let me just adjust the settings of Fib Arcs first. There's a problem with the scaling of the Fib Arcs. You really have to adjust it to the tenths if you're working with the problem is we're working with 3 digits. So there's a scaling problem when you're using Fib Arcs. Again, I don't use Fib Arcs myself, but in theory, you're supposed to see the arcs acting as support and resistances. Although if you look at it, I don't really see the arcs acting as support and resistance here. Raj, top to bottom. Actually, that works if you have a bear market. Remember, when you're drawing this, I know it looks good in top to bottom, but remember, you were supposed to get the resistance line. If you do it that way, I know it looks better if you do it that way, but how can we use it? After all, we were looking for support or resistance level. So you draw it the same way as you would draw your retracement analysis. If you have a rally, you start from the bottom, draw it to the top. If you have a sell-off, you start from, okay, this is where you draw top to bottom. You've got a sell-off. Okay, that's when you use top to bottom. Okay, I know it looked good earlier using top to bottom here, but you had a rally. In this case, did it act as a good resistance? I guess we saw a bit of pullback at 50 fib, a bit of rejection at 38.2 fib. One can say that we again were rejected around 61.8 fib, although personally I don't find it that useful. Okay, so guys, whether you're drawing Fib Arcs, Fib Fans, Fib Retracements, the way to do it is you start from the starting point, that's always your point A, and point B would be the extreme, the other extreme of the price swing that's being analyzed or that's being assessed. Okay, some guys actually believe that Fib Arcs and Harley, you also don't know who uses it. Yeah, it's a curved channel. Um, but as you said, I don't know of anyone who uses it. You don't know. I don't know of anyone who uses it. There's a theory that I've read somewhere that you're supposed to use Fib Arcs and Fib Fans, Fib Arcs and Fib Fans, and whenever you see them intersecting each other, they're supposed to represent a significant price action. But as you can see in our chart here, I don't see anything significant in the intersection. I don't even use time zones. Now let's look at the next module, or the next slide. Fibonacci channels. I'm not a fan, but I find it an interesting idea. Fibonacci channels are basically a variation of retracement analysis. In retracement analysis, we ask the question, until where will the pullback go? In Fibonacci channels, we ask, all right, if this is our channel, this is the width of the channel, can we come up with support or resistance levels in the direction of our channel? Okay? So how do we draw them? If you have a bear market, you look for two prominent lows as the as the reference point for your channel. In a bull market, you look for two prominent highs and you use it as the base for or the reference for your channel. How does that work? Here's how a Fib channel would look like. Let's do it in a chart. And I hope nobody minds. Let's use Swedish krona. How do we do, where is that? Oh, there we go. No, that's Fib expansion. Oh, there we go. Fib channel. So if markets are rallying, you identify the support line. Nice support in Swedish krona. And supposedly, if we use Fib channels, we can come up with support and resistance levels going forward beyond the reference point of our charts. So let's see if it works. Where's our tool? Here we go. So points A and B are basically the reference point of your rally. And the subsequent lines that you generate are now considered to be potential resistance areas, potential support areas. In this case, since we are talking about a rally, we tend to think of any subsequent line as a potential resistance level. Again, the question, does it work? Well, see for yourself, folks. Let me just adjust this though. You can actually adjust those lines. You have to put your Fib 100 to the width of our channel. What's the width of our channel? Here's the rally that we initially saw. So that price swing should give me the width of my channel. I now have to put Fib 100 around that area. Intersect Fib 100 with that with those highs. Okay. And you get further resistance levels by using the channel lines generated by the Fib tool. Okay. Of course, this is Swedish krona. I don't really trade this, but again, our evidence if it works or not is our eye, and you can just see for yourself. So the main rule is, if you are looking at a market that's rallying, your reference points would be the prominent lows. Let's look for a chart that's dropping. And do this. Hey guys, what's the chart that's dropping? I guess dollar yen's dropping. Let's consider this as our primary swing. And okay, let's look at Aussie. That's a difficult chart. Where's my price swing here? Let's consider, okay, this would look very funny. Let's consider this to be, so let me deactivate auto scroll. Let's consider this, okay, you know what, I can't even think of the reference here. All right. Let's consider this point of Aussie sell-off. This this area. Um, nah, you have a violation of a trend line. Okay, here's my problem. You have a violation of a trend line already here, so I can't really use that. Let's use this instead. We would consider this to be our initial. You really gave me a hard one there, Boyki. But I guess that's what I'm here for. All right, there's no channel. This is a market that's just selling off and then congest and then sell off. But I think we can do one here. Let's think of this as our, oops. Let's think of this as our primary reference now for the sell-off, our main trend line. So we will try to come up with channel lines based on this main trend line. I don't have EURAUD. Or do I? Nah, I don't have it. Oh, there is. But let's do EURUSD first and see how this works. So let's pull up our Fib channel tool. In a rally, this is the reference point. Again, you should identify the width of your sell-off and where's that price swing. Here's the price swing. So there's our price swing. And there's Fib 100. Did we respect the subsequent lines for the Fib channels? Well, we hit 61.8 Fib channel and we bounced. We hit the 121.86 Fib channel and we bounced. Hit it again. We bounced, getting rejected from FE 100. Rather from Fib channel 100. Although our latest breakout really exceeded it already. But nothing really lasts forever. The main point here is that at least you have a reference point. Of course, for those of you who are now looking at the chart, then you have to ask, all right, with respect to your latest sell-off, what can we expect? If we consider this to be the new primary trend line, then Boyki, well, APF is another form of channel after all. Where is FE 100? There we go. So the important thing is you identify by width by aligning FE 100 or the Fib channel FC. I'm so used with FE. With FC 100, Fib channel 100, with the price swing that you're evaluating. And this is the main swing here. And well, looks like we should be looking for rejections whenever we touch this line. Well, Jez, you don't use the Fib channel tool in a sideways market. You use your Fib retracement to do that. In fact, Fib channel is relatively new. Originally, people were using Fib retracements, and then someone thought of, hey, can we apply it in a channel? Can we apply it in a trend? And looks like you can apply it in a trending market. And now we have this new tool, your Fib channels. But in a sideways market, okay, in a sideways market like this, your main tool would be your retracements. Figure out what kind of pullbacks to expect. Figure out Where can you expect some form of bounce? Okay, so 23.6 we pull back, we bounce. Next test we push through, we saw 38.2 fib, we bounce. Then we push through 38.2 fib, we saw 50, we bounce. Okay, so yeah, when you have a sideways market, you use the retracement tool to figure out how far a pullback can go, to figure out where can you rejoin the long side of the market. All right. Now this is a tool that hardly you use it, but I don't use it. Again, this is something that I don't really know anyone who uses it. But the fib time zones are really just a graphical representation of your actual fib numbers. Remember our fib numbers? Remember that rabbit problem? Our ones and 2 and 3 and 5, our Fibonacci summation series. Well, you heard about one person who does it. I wonder if you can introduce me. Some guy, I don't know who, thought of, alright, if we can come up with all those retracement tools, expansion tools, fib fans, and they seem to work well, can we now use fib to predict the future? Okay, and how does that predict the future work? Well, according to theory, or what whoever invented this did, he basically draws a line along the Fibonacci summation numbers, Fibonacci summation series. Okay, so a line is drawn with respect to your big price swing. That line representing 0 and 1. The first, the time where your immature rabbit grew to a mature rabbit. Okay, that should represent the price swing. And then subsequent fib lines are drawn according to the Fibonacci summation series. In theory, the subsequent lines are supposed to identify trading periods, trading days, trading hours, when you can expect a big price action. Now, I had a hard time looking at a chart where I can find a fib turnaround at 3 and a fib turnaround at 5. Okay, I actually fixed this chart to look this way. But let's do this in a live market. And can someone give me a pair so that you don't accuse me of fixing things? Maybe GU. Hey guys, those are charts that I look at every day. Boyking. Okay, I don't think I have do I? No, I don't. Well, John, yeah. Okay, guys, this is actually the last slide. So after this, we can just go through different charts, applying the different tools as you'd like me to do. But okay, let me just pick something that I'm not familiar. Okay, the krona I really don't trade, so let's look at the krona against the euro. Now, in theory, you're supposed to identify one big price swing, one significant price cycle, and from there, lines are projected by the fib time zone tool. So let's find one. How about this? One significant price swing. That's one big sell-off. Oh, thanks, Harley. Would certainly look at it. But you know, I've racked my brains on this repeatedly, and I really couldn't find anything. So here's the significant price swing. According to theory, well, Boyke, I look at a lot of charts, and I don't want people accusing me, hey, you've fixed the numbers so that they work the way you're telling us it's supposed to work. I don't want to get accused of that. That's why I want something that I'm not familiar with. And well, okay, fifth time zone, you're supposed to identify one good price swing and draw that draw your price action there. Well, we have one here, and you know what? We have a turnaround at at two. Okay, if we let's zoom in. Here's the swing that we identified. Okay, there's the low for that swing. Here's the swing that we identified. Um, we had a turnaround right after two. I didn't really say that it's significant. Three, nothing happened. At five, nothing happened. Six, eight, nothing happened. 13, nothing happened. So I don't know. I don't think that it works. But Hardy's given me a reference. I'll try to look into it. But here's the thing, guys. Um, Technical analysis shouldn't be hard. Applying a technical tool shouldn't be hard. If you spend too much time trying to find the right line, the right high, the right low, then I think of it as curve fitting, almost like curve fitting already. And it shouldn't be how things should work. So if you're spending too much time already trying to figure out how best to get my fib lines, then perhaps that tool isn't really working. So let me delete that. And guys, if you have any questions, now would be the time. You have any chart you'd like us to look into? Questions, anyone? Euro. Yeah, actually got hit on that euro. Okay, let me just do fibs on this one. So what can we expect of euro? Big picture. All right, this is a good question for euro. Where do we draw our fibs? We have so many sell-offs and pullbacks, but I tend to think this is our latest sell-off. Big picture. This is daily charts. We've had a nice pullback in this previous sell-off. So let me stick with the fibs at this level. And what is this chart telling me? Well, we managed to close above 23.6 with retracement. So I should be looking for a potential bounce still. I actually started out having a bullish bias in euro today. I was thinking the way we closed above 23.6 fib suggests that a further pullback is possible. I was thinking you have a very nice resistance around 38.2 fib. 125 is also there. So I'm thinking, yep, my pullback should at least see me hitting that 125 area. John, reversal at 25.20. So are you saying that if there's a push above 25.20, You expect this to rally or you expect it to sell off? A rejection. Because for now, I'm calling what we have here as a pullback. But well, as I look at euro here, from the fib perspective, I should continue looking for a further push on the upside. I should continue looking for the rally to at least C125. Let's use another fib tool. How about fib expansion? Do they really work? If you compress your euro chart, you're going to notice that you have to go back to 2008 to come up with a price reference for further sell-off targets. So let's use or let's see how fib expansion would have worked in euro before. Well, as I said, I use fib expansion to come up with price targets for sell-offs if there is no reference point. Did EUR or did fib expansion or was fib expansion particularly useful? Well, see for yourself. Here's the latest or here's the price swing that really did not have any reference point anymore in intraday chart for euro. And following a break of your lows, how much of a sell-off did we get? Our sell-off went to FE100, 2256, before bouncing. Although we had that subsequent sell-off. Of course, you are supposed to use them as price targets after all. You're not expected to see a reversal. Using the same though, we can, well, I know it sounds ridiculous, but according to fib expansion, we should actually be looking for 1743 as another potential price target, okay, for your euro sell-off. Okay, so guys, yeah, personally, I tend to use retracements more. I tend to use fib expansions when I see that there's really no reference point in my chart on where or I could expect prices to go next. Questions, folks? All right. Sorry, looks like I had the I I had the scroll slightly up. Let's apply GJ and dollar yen. Well, let's look at dollar yen first. I hope you don't mind. I normally look at dollar yen first whenever I try to assess what's going on in GJ. Okay, what do we have? USD JPY. Big picture, big sell-off. Our sell-off was rejected at 78.6 fib. What can we expect next if we are an intraday trader? This is really a big picture move now, guys. It would be very difficult to assess this in the lower time frames, but for a big picture perspective, I tend to think 23.6 fib, 8981 roughly coincides with this congestion lows. So I'd say that would be that should be our price objective in our latest sell-off. In intraday terms, what can we come up with following what can we come up with following our break of lows? Well, let's see. Assuming that I didn't know about 8981 as the price target. Again, if I am to assess the price objective here, I would be using Fib Expansion. Although, as I said, I would use the bigger picture tool. From Fib Expansion's perspective, our price objective has actually been hit. FE 100, 90.50. Next target is 89.87. Let me move to the lower time frame, see whether we did get a bounce of 90.50. I don't really think that it's pretty obvious. We tested it once. We didn't even get quite get to 90.50. You pulled back, and then of course you now have this breakout. But if you care to examine it, I'd say just watch out and see what happens when we get to 89.94 on an intraday basis. So for me, if you're looking at this on the intraday level, then I would use that Fib Expansion for my price target. And with the break of 90.50, we now think 89.86. However, I now think that our sell-off is really big picture. We really just have a very risk-averse environment. So I'm thinking we should be testing 23.6 Fib. We should be using this congestion lows at 89.80 as a reference as well. So I'm thinking 89.81 is where I can find a stronger support level. GJ. Okay, we're actually running out of time, guys. So let's take a quick look at GJ. GJ, we have exceeded. Okay, this is nice. You look at GJ chart, then you no longer have reference points until you hit your previous lows at 1907. Is this all-time low? Looks like it. Okay, so 1907 is an all-time low. Until then, what would be our price target? We have a break of the low. However, if you look at your daily chart, again, we can use Fib Expansions to come up with price targets. Here's the latest downswing in the Fibs. Here's your reference point. High, low, high. So, according to Fib Expansions, we should look at 2416 as the next bounce off point. John, normally I have the fibs in all my charts. But this webinar is basically about fibs. So I didn't, sorry, normally I have moving averages in my chart, but this is all about fibs. So I'm ignoring it. I'm treating them as separate subjects. So again, with our breakout now, I tend to think on a daily scale, look for supports to come out around 2416. Look at this on the really low time frame, hourly level, and we can do Fib expansions here as well. Latest downswing in hourly chart. There's your pullback. Well, we're talking about 2760 over the next day or two. So let's see what happens, guys. Again, for coming up with price targets in uncharted waters, you can use Fib expansions. For coming up with pullback points, you can use retracement analysis. And for projecting trend lines, you have your Fib channel or your Fib fans. So folks, thank you for joining me in this seminar. I hope you enjoyed it. I hope you learned something out of it. And hope to see you in the next one.